And a Monday. So today we are a bit late, but then because it's Monday, there's still no excuse, so I still do it today, even though it's a couple of hours late. I've got a really intensive schedule today, so that's the reason why I push it to 8 o'clock. But if the time is better than 5 p.m., please let me know, or any other time would be better, so I can look into it, look into my schedule as well, so we can incorporate a better time. Okay, so without further ado, today's topic is about business startup. It's actually for the client, if they are starting a business, quite often there are loads of questions around business startup, because it is something new for most of people, and then we want to make sure we know the tax implication, we know our responsibility, because we are about to become a business owner, or even become a company director. So make sure we know our responsibilities. So one of the most popular questions, which I'm going to cover today, is about what kind of business structure is good for you. Either set up as a sole trader or limited company. It is a very popular question for people who are starting a business of any kind. Okay, so just a little bit of brief information. Of course, for pure tax purpose, limited company has a lot of advantage. In particular, if you are running a profitable business, the tax advantage is quite big, because you can use it. Company tax is only 19% at the moment. But if you're making profits as a sole trader, then effectively it can be taxed at as high as 40% or 45%. So really, for pure tax purpose, running a limited company is better. But then there are lots of other elements we need to consider to find a better business structure for you. Okay, so of course, lots of people say there are benefits of running a limited company, but for some people, perhaps sole trader is a better option. For instance, if you are a sort of bootstrapping entrepreneur, what does that mean? That means you are starting a business, but then you're in the meantime, you're still keeping your day job, because your business is probably not making enough sales, or it's just too early, then you don't have enough income to cover your living expense. So at this time, you might just start your business on the side, but then at the same time, you keep your day job. So for this kind of people, if you, for instance, if you're starting a consulting business, or if you're like a life coach or business coach, so you start things on the side. And then at the beginning, you have other lots of business expenses. Perhaps you're attending courses, you're finding a mentor, you have to pay the fee. You find an accountant to make sure you get advice, or find lawyers or whatever. Your expenses are bigger than your income. Then at this stage, it might be worthwhile to just keep as a sole trader, because at this point, you are effectively making a loss in your business. And if you're making a loss as a sole trader, you can actually use that loss to offset your other income. In this case, it's your employment income. So you can get some tax back. So that can really just a better of sort of aid some cash flow, give you some cash flow, and give some tax credits. So you have more money to invest in your business. Okay, so of course, even if you are not keeping your day job, even if you're just starting out, and then your business is small and the structure is not too complicated, mostly like consultants, or you're providing services, then at this stage, perhaps it's worthwhile just keeping as a sole trader, because as a sole trader, your responsibility is not as much as running a limited company, because sole trader, you only have to file a self-assessment once a year. At most, you will need to keep all your business expenses, keep your records, know your responsibility. But then, if you are at the same time, if your business like structure is not that big, and you set up a company, because as a company director, you have to file your company accounts every year, because limited company is a separate entity from yourself. It's just like your sister. So you have to take care of your company's tax return as well as your tax return. So it's double the responsibility, and also the filing company's accounts. It's a bit more complicated than just doing a sole trader accounts. So, and also extracting the profit from the company. You cannot just randomly draw the money from the company, because you might get a tax charge if you are not careful enough. So really, at the beginning, if your business is not too complicated, and even if you're just making very small profit, then perhaps just keep as a sole trader. And then at some point later on, if your business really grow, you think it's come to the point that it's worthwhile for you to run a limited company, then yeah, you can go ahead and start it. Okay, so coming to this, there's another question people ask: when it is worthwhile for you to set up a limited company? If you're being a sole trader for a while and you see your company is growing, when is the time? Okay, the sweet spot, of course, there will be a sweet spot, but then it's different to everyone, because either as a sole trader or as a limited company, you are taxed on the profit, not on your top line revenue. So if you're earning 50 grand and you spend 50 grand, so it doesn't make any difference, because you don't pay tax anyway. So it doesn't really make much difference. But then if you're making 20 grand in profit, then at this point you might think it's probably better of you just set up limited company, because if you are making profit of 20 grand, running a limited company, you can take out about 10 grand as your own salary. So that's because 10 grand is still under the personal tax-free threshold. So if you take that doesn't trigger much personal tax burden. And your own salary, if you're running through the payroll, so your own salary is a tax deductible expense for your company. So that's a tax benefit you can play around. And also, being a limited company, you don't have to worry about like class 4 national insurance, because at the moment, as a sole trader, you're not just paying your income tax, but also you're paying national insurance. We call it class 4 national insurance, as well as you might have to pay second payment on account. That means you have to pay next year's tax in advance. So for cash flow wise, it might not be suitable for you. So at this point, you might think, yeah, why not? I just set up a limited company. I take that salary. Just under the tax-free allowance, so it doesn't trigger further personal tax burden, and effectively you save company tax as well. And then the rest you take as a dividend, because at the moment, even though dividend tax has changed, at the moment still cheaper than salary or than like your sole trader income. Because if you're earning like just basic rate, like just basic rate brackets, currently it's roughly 45K, then the dividend tax is only 7.5%. So that's an advantage. Whereas if you're having the profits of 45K, then yeah, at least 20% you need to pay in tax. So still there's a tax benefit. Okay, so and also other element you need to consider is if you're running a limited company, most of people, they start looking for accountant because it's more complicated. They have to keep their books in a more comprehensive way, as well as they are double burden, like filing accounts, filing the company tax and personal tax. These are probably get more complicated, and they will find a professional to do it to make sure it's compliant and give them peace of mind. So all these things, even though you're confident you are doing it yourself, again, the time is also the cost. So all these are the things you need to consider. Of course, there will be a sweet spot, but then it's different for different people. Okay, so the other, as we mentioned, there's for business startup, perhaps if your business is very simple and you might be worthwhile to keep as a sole trader. But there are some exceptions. For instance, if you're a startup, like a technology startup or some sort of startup, you require funding, you're looking for investment. At this point, you have to set up a limited company structure, and you have to, because you might have to give up your equity to your investors, because as a sole trader you cannot attract investors that way, because as a sole trader the business is actually relying on you, and also one of the feature about being a sole trader is if you as a business owner resigned or being ill, you cannot work, or the sole trader has died, then the business will die because of that person. But if you're running a limited company, even if you resign, you can give your share. You can give your share to some people, like give to your trusted employee or someone you trust. Let that person to take care of it, and set up other people as a director, so the business will continue. So that's also one of the reasons, if you are looking for investment, then the investors are looking. You have to have like limited company structure, otherwise you cannot attract the investment like that. Then of course you will set up a certain share structure for the investors. You might say you as a business owner, you have A share, and they have the like B share, just investment. They have different rights, and you have a decision voting rights, and then they don't. So some people do that, and then there are different class of shares you can set up. So, but of course it's really different to the individual. Okay, that shows some light. Some circumstance that you have to be at a limited company structure. Okay, and also there are other questions like, if I am about to set up a limited company, should I do it yourself and ask an accountant to do it? Again, this is actually a really good question. Again, here I'm not here to try to persuade you to use accountants. I am an accountant myself. I do help clients set up a limited company and give them advice about the critical issues, and issue them relevant paperwork and complete the registration. But here it's not trying to persuade you to like everyone should use an accountant. Of course, if you're confident, if you have the knowledge yourself, then you can do it yourself. The benefits of using an advisor, not just being, save your time, but then, of course, they will issue the correct paperwork to you as well. But the benefit would be they should be able to take care of what's important to you. So what are essentials for you, specifically for your startup. Say if you are setting up a consulting business, and then other things are very simple, but you just want a simple setup and know the essentials. Of course, like accountant, they can have this kind of service for you. Like my firm, we do have this kind of service, just package everything, and then we make sure you understand. Because you have this company alive, then we need to make sure you understand what you're doing, and what are the critical deadlines, how you can keep your records. These are also critical as well, and what would be easier for you to keep your records, give you certain training, so all these things. But then it really trust your intuition, what's right for you. If you are confident, of course, go ahead. But if you feel perhaps there's certain area you're not sure about, you find it's probably better, give you a better reassurance that find some experts to do it for you, to take care of it, then please do so. Just really trust your intuition on this. Okay, having said, sole trader or limited company. Again, these two are not the only structure you can choose. There are other structures like a partnership or even limited liability partnership. So all these things you can also consider. In particular, you are running a business with your business partner, and you two are like the nature of your work relationship is really you are giving equal contribution to this business, and you are having a certain share. And also for decision making wise, you think partnership is a better way for you, then also please go ahead. So these are the other options as well. But I assume most of the small businesses at the moment, you're starting up as yourself, and then perhaps sole trader, be the sole trader. That will be the most cost effective for you if your things are simple. But then it doesn't stop you to be a limited company from day one. As said, if you are confident that you are making a healthy profit, or if you think a limited company like a limited structure, limited liability can be beneficial for you, then of course go for it. And if you do want to look for investors, then yeah, setting up a limited company, that would be the option. But as said, just to start with, just keep everything simple, and then as you run the business, as things go, you will understand how these things work, like how to keep your records and what are the responsibilities. You will get more confident at it. Okay, so I hope you find this episode useful, and of course we covered a little blurb about limited company and sole trader. Oh, thank you, thank you. Okay, so yeah, of course, if you do have any specific questions, or if you think your question is like is too specific, and then you're only confident when you want to talk to me confidentially, please be free to personal message me. Or if you have looking for more resources, I have a private Facebook group. It's called Tax Deductible Lifestyle Tribe. So be free to request to join. And also we have our panel of experts like financial advisors or other business advisors who can help you to grow your money and earn more money from different perspectives. Okay, so again, I hope you find this one useful, and I hope you have a wonderful evening. If you like this video, please be free to share. If you do have any feedback, please be free to comment. Thank you very much for watching, and thank you for being the really great audience, and thank you for the love. Really appreciate it. Okay, so have a wonderful, wonderful evening, and I shall see you very soon. Bye now.